Welcome to the Political Risk Podcast, an independent podcast focused on geopolitical risk to serve decision makers in specialty insurance markets, reinsurance, and beyond. I'm your host, David Benyon, and I'm joined for this episode, firstly, by Genevieve Ahinful, Head of Political Risk and Trade Credit at Africa Specialty Risks. We discuss ASR's new Lloyd's syndicate and the political risk insurance portfolio that Genevieve manages, before we get into several African countries that are being closely watched in political risk terms, not least with so many elections taking place this year. These include Rwanda and Ghana, for which there are elections in July and December respectively. We also look at Kenya and Egypt, for which there aren't elections, but they're certainly interesting territories, and South Africa, which has just had an election. For the section in which we talk about South Africa, we're joined by Tyrone Hopwood, Senior Liability Underwriter at ASR Re, who is South African, and he gives some additional thoughts, alongside Genevieve, on the political situation there and its wider ramifications. The South African election took place on May the 29th, with the ANC falling short of a majority for the first time since 1994, picking up 40% of votes. Now, we recorded this episode just after that, on the 5th of June. A week is a long time in politics, and a fortnight is probably asking a lot for things not to change. So to summarise, since the recording, the ANC has now entered into a coalition government agreement with the pro-business, white-led Democratic Alliance, DA party. And the ANC leader, Cyril Ramaphosa, has been re-elected as president of that coalition government. All of that is as of June the 14th. It's still very early days in this scenario, so what it means for South Africa from a foreign investment and a political risk insurance perspective is explored in this episode. There are a couple of other coalition scenarios that are explored in this episode that we talk about as possibilities at the time. They haven't come to pass, involving different parties such as the EFF and the MK. Remember that a coalition hadn't yet formed when we recorded this. I'm going to call these B scenario, C scenario. They haven't yet happened. They're still insightful. As Tyrone notes, the situation is still unfolding. There could be some major bumps in the road. It's important to note who is in government, who is out, how that could still change in the weeks and months that go on as South Africa faces an unprecedented political situation. I hope you enjoy the episode. Genevieve, thank you for joining me. Pleasure to have you on the podcast.
Thank you very much for inviting me.
So first of all, there's a new Lloyd's syndicate, which is, I think, a first for African business in the Lloyd's market and for ASR. So yeah, can you tell me a little bit more about the Lloyd's syndicate? What will be underwritten from it?
I think one of our greatest achievements at ASR to date, it was achieved in a very short time frame from when sort of we made the application to when the syndicate was launched. So the syndicate is Syndicate 2454, and we operate the syndicate through our managing agent, which is Apollo. It's an African-focused syndicate, following the footprint of what ASR has been doing since establishment in 2020. So we are writing through Lloyd's on all our other lines of businesses, being political risk, trade credit, property, energy, construction, liability, PVT, treaty, parametrics. We're focused on providing the same level of service and expertise as we do for our existing business, which is through our MGA platforms as well. But the Lloyd's Syndicate has been very successfully welcomed by a number of brokers and clients alike, and we're fully staffed Monday to Friday.
Let's talk a little bit about ASR's background, its footprint, its strategy, and it's a company that's specifically underwriting African business.
So as mentioned earlier, we were established in 2020, started underwriting in 2021 across several lines of insurances. Our target is the corporate and specialty market, so providing insurances for investments into Africa and out of Africa. We also aim to build capacity locally, working through local brokers, working through local cedants. Obviously, we service the London market through our peers and our partners in the London market as well. But our main focus really is to help develop the expertise within the local market. You will find that in a number of the countries that we write risk in, things like political risk and trade credit is known and demanded and wanted, but the expertise is not there. So through our collaborations on the ground with our partners, be it capacity providers, be it cedants, or be it brokers, we do a lot of training, we do a lot of knowledge sharing to ensure that the local markets can help develop their expertise. We can meet the necessarily regulatory approval and also capacity build within Africa to help the knowledge and the expertise within African countries.
And so political risk, as we know, kind of sits within that wider credit suite of products. So yeah, let's talk a little bit about the case for ASR, where it kind of sits within your book and where you're underwriting it as well.
In the political risk trade credit team, we are spread all over Africa. So we have an office in Nairobi where we have an analyst and a business developer heavily involved in the trade credit and political risk team. We have an office in Casablanca where one of our colleagues in the strategy team sits. We have an analyst who focuses in West Africa, currently sitting in Paris, but focusing on sort of Francophone West Africa with knowledge about the CEMA regions. So we cover East, we cover West. And then when it comes to the South and North, so for the North, we have our colleague sitting in Casablanca, and we leverage a lot on his knowledge and his local experience of the market. In South Africa, we have existing colleagues, whether it's the likes of Tyrone in liability, we have colleagues in property, we have a business developer. Actually, our head of business development spends probably 80% of her time in South Africa as well. So we leverage on not just PRTC specific knowledge, but also local knowledge, on the ground knowledge, in order to underwrite our business.
So Africa Specialty Risks, your CEO is Kenyan, and you yourself are from a Ghanaian background. Mm-hmm. And clearly, I mean, Ghana's not a Francophone West African country, is it? It's English speaking. But there's just such a large number of countries, all with different nuances to them in doing this business, culturally and historically. So does having that kind of local knowledge give you a bit of an edge, linguistically, culturally, knowledge, experience, when working with local markets?
Without a doubt, because I think when you are underwriting African, and I know everybody says this, but we have 54 countries. They're all very, very different, from Francophone to Anglophone Africa to Southern to Northern. It's all about understanding whether it's cultural or political differences between the countries. So, for example, if you see Ghana next to Cote d'Ivoire, you need to understand the nuances of the political landscape, even the cultural landscape, even though you have the same tribes of people between certain parts of Cote d'Ivoire and certain parts of Ghana. Similarly, if you look to the north of Ghana, you have, say, Burkina Faso. So Ghana is surrounded by Francophone countries. However, you need to understand that even though there are language differences, culturally and in terms of ancestry, they're very similar. But of course, when it comes to the constitution, they're very different. And this is one of the things that you need to understand, how to navigate from the Anglophone side to the Francophone side, the relationships, the cross-border trades, the fact that you will literally have a cousin and a sibling on both sides of the border. So being Ghanaian, understanding the West African Anglophone landscape, or being East African in the case of my CEO, or South African in the case of a number of my colleagues, or, Francophone Africa, adds to the knowledge of not just understanding the political nuances between the countries, but also the economical differences and how certain things in one country impacts the other. It certainly does give us an added advantage. So, as one of the things we'll cover later on with elections coming up, how does Ghana, the cultural environment versus the political environment, respond to elections versus perhaps somewhere like Benin? We're able to have that discussion and that dialogue within our teams and the understanding, because we have the people who have lived in this country, still live in this country, experience it on a day-to-day basis, and then share their knowledge with us.
Well, you just touched on elections. It's a massive election year in Africa, across the continent. So let's talk about some selected territories to discuss the political risk outlook. Firstly, let's talk about South Africa. So we've just had very recently an election, and pretty dramatic outcome in terms of the ANC losing its majority for the first time since it took power in, was it 94, at the end of apartheid under Nelson Mandela. So that's unprecedented political territory for South Africa to negotiate, and it's kind of just obviously gives that what next question.
For us, what's interesting, certainly in the PRTC team, is the potential for what the coalition formation will look like, right? And this is where I will rely on, I don't want to say inside knowledge, but somebody who understands the nuances between the different coalitions that could potentially form. So whether it's sort of ANC and the DA, ANC and EFF, or ANC and MKP, or even a more unified government, I think is worth hearing from Tyrone on sort of your views, Tyrone, on the different formations and what it could mean for the South African economy.
Yeah, so it's been a big change in a very short period. We touched a bit internally in the last few days what we thought this meant for the country. But I'd like to start off by saying very big, proud moment for South Africa to actually allow democracy to continue. The ANC knew at this poll that they were going to probably suffer. They probably didn't expect to go to 40%, what they got. I think the peak that the ANC was at was, I think it was 2009, which was under the Mbeki government. I think they had in the 60s. That was their peak. Now they're sitting at 40%. So that's a drastic swing. I don't think they expected that. I sure didn't expect 40%. I was probably expecting 45, still below 50%. So from that perspective, I would say a big shock. Whether the coalition happens in the shape or form that we've been talking about, yourself and I, that's yet to be seen.
I think that's one of the things that worries us in the PRTC team, the investor confidence that's being buffeted at the moment by this expected but unexpected. I say expected but unexpected because, as you quite rightly touched, we all expected the ANC to suffer. We just didn't expect them to suffer that much. I think most of us were sort of expecting maybe 50, 51, 52%, but certainly not below that. So the investor confidence for us in the PRTC team is, depending on the coalition that's formed, what are the likely impact on investor confidence, right? Because if somebody comes in, and I think you can go through the different coalition groupings and what that means, the different views from the ANC view. For us, that is critical, because if someone comes in and says, okay, we believe in nationalization, that presents a potential issue for us in terms of what perils we cover, because we've gone from an ANC government who's promoted the private sector, a number of privatizations, and exactly a free market. And then you might have a partner who might have an opposing view. So I think it would be good to get your idea on, if it's the DA, as an example, who come in, what are their views, or are they aligned with the ANC?
So the DA is pro-West. That's the first thing that we got to start off. And the world we're in today, it's multipolar. You can't pick one poll and say we're 100% in the camp of the West. So that's the first thing that one needs to consider, right? Is that the DA is pro-West 100%. Now the ANC treads between the West and Moscow. So that's kind of their combination. And with a coalition, with a DA-ANC coalition, you've got the ANC at 40% currently of the national vote. You've got the DA at 22%. So if everyone votes in the same direction, you've got 62%. But where it becomes a bit fuzzy is that those 40% ANC votes are not all going to go in the direction of DA. And that will also be the case for the election of the president. So let's say a third of the ANC doesn't vote across in the direction of the party line. So we lose a third of 42. So we're probably sitting at in the 20s, say high 20s, 28%. Then you combine that with the DA's 22, you're just at 50% to hold a government together. So that's tricky, right? And at step one, if you've got, let's say the whole of the ANC votes with the DA, then you've got a government to start. But as things progress through the next 5 years and things go to vote, you might not always, and you definitely won't always get everyone voting in the same direction. So you've got a government which is probably quite difficult to run, I would say. And if you go into the longer term history of South Africa, if you go back 200 years, it's always been a one-party state. So this goes back to the days of the Dutch. Then it was a British colony. Then it became run by the Afrikaner. Then in 1994, we went to democracy, one man, one vote. Then you had the ANC from 1994 for 30 years, right up until now. So you've always had a one-party state. That's the way South Africa has been. Now, going into the world of coalition, because it's such a young democracy, it's difficult to put these sort of deals together. People aren't used to working together and compromising. So that's probably the first thing that needs to be considered. If we say, okay, DA, ANC, very pro-business, I think the ANC is self-correcting, and this is one of the painful steps that they probably need to do, is do a coalition with the DA, ANC.
Okay, so now we're going to talk about hypothetical ANC and EFF scenario. I'll call this scenario B, and Tyrone's going to go into this. It's almost certainly a bad one for foreign direct investment and political risk insurers. The EFF stands for Economic Freedom Fighters. They are a communist, black nationalist party led by Julius Malema. The EFF, just to be clear, is in opposition. It's not been included in the coalition government that has been agreed since the conversation took place with Tyrone.
So you've got the potential of a ANC-EFF combination, which would take you to just shy of 50%. So you would need to do a deal with one of the smaller parties to take you above 50. So ANC-EFF combination is not pro-business. It's quite a radical combination. That combination results in a nationalization of the mining industry in South Africa. So we're talking gold mines, platinum mines. EFF also wants to nationalize the banks, so all of the major big four banks in South Africa. So that's very much a Venezuela type route that EFF wants to go down. There are people in the ANC that actually support that radical agenda. I'd probably say a third of the 40% is on that page. But if you bring the EFF into the ANC, what you do is you eliminate your moderate vote in South Africa. So the moderate vote would be the middle class, that's the black middle class, home, car, job, children in good schools, private medical aid. You're going to eliminate that moderate vote with a radical EFF vote coming in. You will shed that vote immediately, and the ANC knows that. Also, they've touted that as the Chernobyl option, which means that the ANC would actually basically disintegrate if that had to happen, because it starts to splinter. Now, this is nothing new for the ANC. So the ANC from 1994, they've shed the EFF, they've shed COPE, and now they've shed MK, which is Jacob Zuma's new party. So they've shed from their 65 down to their 40 over the last 30 years, and please understand that this is not the final iteration of the ANC. There will be further shedding which is going to occur, and I touched on it a few minutes ago, just people voting against party lines.
Okay, now we're going to talk about scenario C. So this is an ANC-MK party, well, hypothetical coalition. MK stands for Umkhonto weSizwe, butchered that pronunciation, apologies, and that's the new left-wing populist party led by former President Jacob Zuma. This is a party set up for this election campaign, and it's named after the ANC's militant wing from the struggle of the apartheid years. And just to be clear again, MK is in opposition. It's not been included in the coalition agreement, which was agreed on 14th of June since this conversation took place. However, still very relevant for the future of South African politics.
Then the combination, which is the new one, is the ANC-MK combination. Now that is enough to go majority, because you've got 40% ANC, you've got 15% MK party, so you've got your majority there. But again, that is an option which is not favourable to the ANC because it involves removal of the president. So MK will only do a deal with the ANC if Ramaphosa is removed as president and somebody else is appointed. So again, you've got volatility coming into that combination. So that is not going to be a pro-business combination. South Africa is run through a constitution. The MK manifesto is to do away with the constitution and just go back to a cabinet parliamentary system. So that gives a lot of powers to the state, that type of option, which again is obviously not pro-business. And that's also an option that the ANC probably want to try and avoid. They want to try and continue to rectify the ship, and it's not going to be based on the MK combination.
Now Tyrone's going to talk about the risks of excluding MK from government, which is now the current situation we're actually facing in South Africa. It's worth remembering that Jacob Zuma played a significant role in the 2021 unrest in July that year, sometimes called the Zuma riots, in KwaZulu-Natal and Gauteng provinces, which was sparked by his imprisonment for contempt of court.
For there to be continuity in South Africa, you would have to give MK a seat at the table in some shape or form. Because if you eliminate that party out of the equation, you isolate them, they are quite a disruptive party. So a lot of the funding comes out of Moscow for that party. They've got a playbook which is, how can I say, Moscow-centric. So it's something that South Africa would need to consider, is if you do isolate that party, what ends up becoming. So we've gone from a rainbow nation in 1994, where everyone gets along, to a very separatist state at this point in time, which is showing democracy's functioning, which is a big tick. But there is definitely risk. We have to face that.
That's quite interesting because of the different couplings, for lack of a better word, that you've just explained. I see potential PVT perils increasing, whether it's disruptions via way of the MKP, whether they get invited to the table or not, and how much they get. There is potential for license cancellations. There's potential for mining regulations and mining percentages being renegotiated. And so for me, as I said at the beginning, the investor confidence for South Africa right now is literally on the edge. And it is quite concerning because South Africa has always been one of the African countries at the forefront of financial integration, of development. And when you look at the history, how far the country has come, it's at that turning point. And I'll be honest, investors are concerned at the moment because it's not just political risk trade credit. Political risk trade credit, there's PVT perils, there's disruptions, assets. I think at ASR, we're keeping more than a close eye. And it's not just PRTC looking at South Africa. We have significant insurance investments in property, in our liability teams, our treaty, energy. So we have quite a bit of exposure in SA at the moment. So it's an interesting time.
We will see more surprises along the way. There's no doubt about that over the next few days. But the whole deck's been reshuffled. This is 5 years, so I wouldn't be looking at it as just the next few weeks. I think the next few weeks we have to get through and elect a solid government, but understand that the parties that are left out are going to be chipping away, and they're going to become the opposition. So if you've got a combination, DA and ANC, then they are one, they're locked up. Whoever's against them, that's the new opposition.
Great. So we were also going to look at a very different territory next. So Rwanda's election takes place, I think it's set for the 15th of July, so not long at all. Obviously, we're sat in London. There is a bit of relevance, particularly for this country, as Rwanda is involved in a current conservative policy with regards to immigration, so which may well change itself prior to the Rwanda election taking place. So with that slight caveat, what's your view on Rwanda?
The expectation is that the RPF will win. If you look at their historic percentages in previous votes, they've always been over 90%. So the expectation is Kagame will get the fourth term. And in a way, for investors, more of the same allows planning, allows forward planning in terms of what's going to happen, at least up until I think it's 2029, possibly. The concern with Rwanda is more the relationships surrounding its neighboring countries. So whether it's the DRC, whether it's Burundi, and in that sense, the continuation of RPF in Rwanda serves the interests of the wider region, not just Rwanda. We're not blind to the fact that, there are issues. So if you look at democracy, in inverted commas, sort of the opposition parties, or lack of, in this case, there is actually only one potential opposition party, which is a Habimeza, because the other lady was barred due to convictions against her, so she can't participate. And Habimeza has only historically garnered less than 1% of the vote. So if you're looking at an RPF, with a historic voter turnout of 90% versus the opposition party we don't need to really say who's going to win because it's fairly obvious. And as I stated, in my view, the continuation of Kagame, at least for now, serves the wider regional interest because of the sort of ongoing potential conflict of if Kagame wasn't in charge, who would be in charge? And where their alliances lie with regards to the neighboring countries. So it goes without saying that, we expect President Kagame to win the elections, and therefore investors are fairly certain they know what to expect, right?
Just to qualify, because previous conversations I've had about Rwanda, certainly the DRC has come up, and Rwandan, I don't really want to call it intervention, meddling, whatever, within the DRC. But for those who are not au fait with that, what are we talking about there?
Yeah, so there's been allegations of whether the Rwandan government supports certain rebels across a number of the borders, DRC being the notable ones. And therefore, it does cause friction between the two governments, sort of depending on the activity of the rebel faction and their attacks that they carry out across the border on the DRC side. So it has created some tension between Rwanda and the DRC.
Does that tension include investor uncertainties that relate to what you do for some of those extractive industries?
It depends on where the extractive industry is located, right? Because the area of concern tends to be sort of the North Kivu, that side, that area, crossing over. And so most of the exposure that we see tend to be away from that. So if you're talking about the Katanga region, where a lot of the mines and the extractive industries are, we don't get that concern. So it does depend on where, if you're looking at a mine, where the mine is, or if you're looking at an investment. So you have a certain part of Rwanda bordering the DRC, which is very troublesome. And by troublesome, I mean, whether it's civilian attacks, whether it's insurgency, whether it's running battles between the military and the rebel factions. Most of the investment into the DRC and Rwanda tends to be away from that side for obvious reasons, because historically, even the UN have been kicked out from that region as well by the DRC. Mm-hmm. So it's one of those regions that's always interesting to watch. However, the investor confidence has always remained, right, because of the role that region plays in the extractive industries, right? It's not an area that, say, the West or the developed markets can walk away from easily without the impact on the global market, the commodity markets, the minerals. So the investment has always been there, but it's carefully placed in certain parts of whether it's Rwanda or DRC, and strategically the coverage and the investment in that particular region where there are troubles is often avoided. But, sort of going back to Rwanda, I think there's a number of things that we also need to keep an eye on. And that is the fact that there is a reshuffling of the sort of the military elite every couple of years, typically every 5 to 7 years. And it does also coincide with not necessarily an election period, but strategies coming up on what the military is doing in that region. There are various speculations about why that's done, but if you look at the cycle of the changing of the guards in the military, it does happen cyclically every 5 to 7 years as well. Of course, there are concerns on certain parts of Rwanda, but I think 100% Kagame is expected to win. And that shores up the investor confidence, which will continue.
Okay, let's move on to a very different territory where your CEO comes from. So Kenya, not an election year, but there have been some perception issues about default risk. Are those misplaced?
That's gone. Well, in the short term. In the short term, I think everybody was concerned about the debt maturities coming up in June now. But as we know, in February, there was the Eurobond buyback, which is what was expected to be the crunch in terms of debt position for Kenya. So that's been, in my view, alleviated, at least in the short term. There are other debt maturities coming up in the next sort of 2 to 4 years. I think 4 years being one of the key pivotal moments. But the thing with Kenya, and certainly with the ASR hat on, is an understanding of the political landscape and how the various political parties who've been in power or wanted to be in power, how they operate. What I've certainly noticed is whichever party in Kenya has been in charge, they're a lot more forward looking. So they think ahead and they act before the debt maturities become a significant problem. Obviously, in the international community, we're always looking ahead. So, we were looking ahead 2 years ago, even at last year, as to whether they would meet the repayments which were due this month, which they have done through the buyback. They've also received funding from the IMF. They've entered, when I say they, the government, they've entered into a number of bilateral agreements. And this is the thing about the Kenyan government, which I think sometimes people overlook, is that they plan ahead and they seem to have a strategy for the impending debt. So whilst this immediate concern about default has been alleviated, I guarantee you they will be forward looking at, okay, when is the next significant debt maturity? My personal view is, in comparison to, say, some of our West African governments, the government in East Africa, certainly in Kenya, thinks and acts ahead a bit more in advance.
That helps for investor confidence.
It does. It does help for investor confidence. I remember 12 months ago, certainly in the PRTC market, there were huge concerns about whether Kenya would make their interest repayments. We at ASR had a different view. And the different view is from the fact that we know that the Kenyan government has very strong relationships with commercial banks, right, which it relies on for budgetary support as well. So we had the expectation that they would tap into the commercial banks in order to get the necessary support they needed and funding, and they did. The flooding in Kenya, I think we can't ignore that very tragic event in the last month or so, has caused significant supply chain disruptions. So park the debt issue, because that's been alleviated in the short term, at least in the next couple of years. Supply chain issues are key in Kenya right now, because you've got a number of things happening. You've got a supply chain disruption on their key export, the flour, which typically would have gone through the Red Sea, but with what's happening in the Middle East, there are significant disruptions. Then you've also got the flooding, which happened over the last month, causing a significant impact on the budget allocation for the government as well. So if you park the debt, I think that there are a number of issues brewing in Kenya which needs to be looked at. You've got sort of the inflation issues, you've got the currency devaluation, which again in the short term has been shored up, right? Because they entered into the fuel supply agreement, which brought in US dollars, and they're doing all that they can. But cost of living in Kenya has risen significantly. Cost of fuel has risen significantly. We were there as early as 2 weeks ago, and we became aware of people who make the decision about whether they would drive to work or not, or take public transport or their version of public transport, because fuel costs have risen quite significantly along with standards of living. In the long term, the central bank needs to do something to control inflation a bit more, because in every country, not just in Kenya, when cost of living rises, when fuel cost rises, that's when you see civil discontent, which can result in protest. So debt maturities, short-term alleviation, but there are other sort of balance of payment issues which the government needs to attend to, and it is a concern.
So let's talk about one other territory where, again, not an election year, but some underlying macroeconomic concerns. It's Egypt. So there's a lot of issues there with the army being a sort of massive holder of property. I mean, you wouldn't expect an army to own chains of whatever they are, grocery stores or supermarkets or businesses of all stripes and sizes, but they do in Egypt. And it's a lot of corruption, a lot of kind of like shadow state, if that's the right phrase for this. And then you've also got food insecurity concerns that correlate to things that are going on in Ukraine and Russia and the Black Sea, and grains making their way to African countries that rely on their import. And you mentioned, for example, just in talking about Kenya there, when you've got prices rise, inflation, or food prices or fuel prices suddenly go up, that can be a trigger for political violence and civil unrest. So is it the same kind of underlying concerns for Egypt?
Egypt's debt to GDP ratio at the moment is sort of circling around the 90%, right? In comparison to Kenya's, which is significantly below that. A number of things. Egypt has seen a significant deterioration in its balance of payments, which has shown itself through the typical inflation. The cost of living has risen, currency depreciation, and FX reserves. Egypt, macroeconomic wise, remains a concern. However, in the last 3 months, a number of things have started to happen, which on a macroeconomic level is positive for Egypt. So you've had the UAE Sovereign Wealth Fund investment of about $35 billion into Egypt, aimed at the tourist sector of Egypt. But the purpose of that investment is to encourage the inflow of foreign currency. So they're trying to take measures which will alleviate the FX issues in that country. You've also had an IMF support of circa 8 billion, again aimed at trying to relieve the balance of payment issues. And I do believe the EU also recently agreed around about the same amount, but through concessional loans, investment grants, but over a period of 3 years. So Egypt now, as we sit here, versus Egypt 8 months ago even, is in a better position macroeconomically than where they were. The concern, as you said, remained the level of state control over assets, as you quite mentioned. And as we all recall, the Arab Spring started from the cost of bread being too high and unaffordable. And that's where the concern for Egypt lies. But in terms of the macroeconomic, I do believe that they're making inroads to turn it around in comparison to previous months.
Let's move to Ghana. So the election is set for the 7th of December this year, and obviously it's territory you know very well. So what's your view on Ghanaian political risk for this year?
Okay, what I will say is confiscation, expropriation, nationalization, deprivation are not perils that are concerning for Ghana. Because if you look at the historic behavior, the historic patterns, the pure PRI perils are really not an issue for Ghana. The concern with Ghana is non-payment, as we've seen with the default that occurred. So political perils, at ASR, we have coverage, non-payment, but corporates in Ghana at the moment. Our concern is with the sovereign. So the MOU that was signed in order to get the debt restructuring, which also is a requirement by the IMF in order to get the IMF funding. So that's the good news, because that had been dragging. And frankly, my concern was whether we had another Zambia on our hand where it's going to take years to reach this agreement. So it's a step in the right direction. Obviously, the road to this MOU has been very painful. I have family in Ghana, and the cost of living has been phenomenal. A basket of goods is pretty much unaffordable for most ordinary folk in Ghana at the moment. But as I mentioned, the MOU signed paves a way for the IMF facility, the IMF bailout, to move forward. And I think the expectation was next month being July, if all goes according to plan. There's also been other movements of funding that we're seeing in Ghana. So there's been a $250 million World Bank loan for the financial sector in order to stabilize the financial sector, because the Ghanaian financial sector has taken the brunt of the defaults domestically. And obviously there are concerns that after the domestic debt exchange program, what will be the state of the financial sector. So this support from the World Bank in the last few days has been very welcomed. It's needed. There is a concern on the power producing side, because a number of the power producers, I think they account for about 60% of the power production into the Ghanaian economy, were not happy with the debt restructuring proposal that was made to them. So that remains a concern. And I do know that on the ground, there are power cuts. I heard of a 24-hour no electricity in a particular area. So, if this is the domestic side, this is not even businesses. So when you walk through certain parts in Ghana, there is a constant hum of generators, unfortunately, because of this power unavailability, because of the constraints with what's happening with the IPPs in Ghana. So it's concerning. There are glimmers of hope, but yeah, that's the macroeconomic level. On the political party front, it's interesting, because obviously you've got the two main parties going head to head, as they do at every election. So you've got, whether it's the VP flag bearer of the existing party Bawumia, or whether it's the ex-president Mahama, who is the flag bearer for the opposition party. I will be honest, maybe 12 months ago, I was fairly certain that the NPP would not be voted back in. But if you're looking at the sentiment and the election campaigns that are upcoming and the support, it's a difficult one to call. at the moment. I will be honest. I think it's a difficult one to call. People are not happy with the existing party, but people also remember what the opposition party achieved or did not achieve from previous years. So, if you'd asked me 6 months ago, I would have told you outright, yeah, the existing party is out. But if you look at the support that the current VP is getting, I can't call it, if I'm honest. I can't call it. So, but it's a personal one for me. We've had debt to GDP ratios in excess of 88% back in 2022. We've had inflation rates in excess of 50% at one point. Currency devaluation, I think at one point Ghana gained the title of the worst performing local currency in Africa for almost a year. So it's been a tough year for Ghana, a tough 2 years for Ghana. But yeah, let's wait and see, because as soon as this debt restructuring program and IMF bailout happens, Ghana has shown resilience in previous years. They've gone through similar, not as bad, but similar situations, and they've come out with substantial growth, double-digit growth in some instances. So I'm hopeful. But that's the Ghanaian in me talking. So,
well, maybe that's a good...
Slightly biased.
Maybe hope is a good place to leave it then.
Yeah,
So,
yeah.
Jen, thank you so much for taking the time to speak to me today and to answer my questions.
You are most welcome. Thank you.
Thanks for listening. I've been your host, David Benyon, and I'd like to thank my guests for this episode, Genevieve Ahinful and Tyrone Hopwood, both of Africa Specialty Risks. That's all for now. Please tune in next time when we'll have another political risk insurer on the show with a focus on carbon markets in the Global South. Production was by Peter McGill, and Lawrence Durkin provided the music. See you next time.